Hello, welcome back to Family Investment. My name is Alex Ko. I've been an investor for 10 years on stocks and shares. And over the years, I've made loads of mistakes, take notes, but some of them are very small, some of them is forgettable. But it's only up to this in 2017 when I look at my notes clearly over the years, it was these three big ones that's stopping me, that's the barrier that built right in front of me, that I couldn't penetrate and break down. But once I broke down the habit, once I stopped repeating these three mistakes, my portfolio went from 5-figure all the way to 6 figures, and it keeps going and growing. It's not because of the market, it's because of my mental attitude. The very first mistake that I had to break, the very first bad habit that I had to break, was because of valuation. Because when I started investing, I always look at Warren Buffett as my master. It's all about valuation, it's all about Benjamin Grimm intrinsic calculation, it's all about the P ratio, the positive cash flow, and the intrinsic value. And then I didn't realize that I was always waiting for the bubble to burst. Especially two key stocks that I will always remember, always on my case study even until today. It is the Netflix and Amazon case studies. These two stocks have made a lot of people millionaires and early retirements in as short as 8 to 12 years. I've known quite a few people personally, and the way they did it was not because of valuation. Focus on the business fundamentals. Focus on the business roadmap. Some companies may not be making positive value, may not be showing the intrinsic value, may not be showing positive cash flow because they're always reinvesting, they're trying to disrupt, they're trying to beat other bigger players in the industries. So always don't focus on the intrinsic value calculation or valuation. Focus on the business and roadmap. That's where it will help your investing propel to the next level. And the second pain in the butt habit I keep making again and again and again, and I had to break it. I had to cuff myself and say, Alex, remember, don't do this again. Mistake number 2 is the commitment is not long enough. I'm not making my commitment long enough to help me propel to the next level. Okay, I'm going to give you a few stocks that I failed to hold long term and how I failed so badly. AMD at $9. I bought AMD at $9 in large volume. And when AMD went to 21, 22, I sold for almost 2x. I was celebrating, I was to the moon. And guess what? AMD today gone as high as almost $100 per share. Could be 10x. And in my current valuation, AMD could go even further. I failed in that sector. Take-Two Interactive is another one. I bought it when it was at $25. Okay, I did all my case studies. I've used the product for at least the first 20-30 years of my life, and I still yet fail to hold them. And now Take-Two Interaction are almost near $150 to $200 per share and still growing for the next generation. Next to is Square and PayPal. Back 3-4 years ago, I knew this company cashless transaction was going to be the next big thing. I even wrote blogs about it. I bought Square at 25, PayPal at 40, and guess what? When they doubled to 50 and 80 respectively, I let go. I was singing and dancing to the moon, 2x. And guess what? Today, this stock, Square, could hold as far as $300 per share, and PayPal are breaking the $300 barrier. So embarrassing even to tell you today. So all I want to say is, when you buy these stocks, hold them. Hold them, hold them, hold them. Because you believe in them the first day. And not only that, you have to buy on momentum. Just because the stock double doesn't mean you have to let go. If you still believe and commit to the roadmap of these companies, you can always buy average down, average up on momentum. There's nothing wrong with that. That's how smart people get richer, because of this habit number 2 that you have to break. And now for the third habit that you have to remove off your shoulder and make sure you get better at this, because I am still telling myself every single day, it's not saving fast enough. Investing is not about you finding the magical stock. It's not about you finding the next Amazon. There's no point you finding the next Amazon and you only got $10 in your pocket. It's all about savings. Savings, dollar cost averaging, and also invest as fast as you can when there's a dip. I'm so embarrassed to say, but I've missed a lot of dips, okay? I've got the dates here that I write in my notes. I missed November 12th when there's a quick flash down dip after the financial crisis 5 years later. Not enough cash when I first started investing, I missed that boat. February 16 when the oil crashed, job was at risk and everything. It was so low and the stocks bounced back up 4 months later. I missed that because I don't have enough cash. June 16, it was the UK Brexit vote, and most of the UK stocks fell on the first 3 days by 40%. I was watching it fall. I knew they were under the value. I couldn't buy fast enough because I never had cash. I ran out of cash. And finally, in January 18, there was a flash crash because of trade wars, because of Donald Trump, everything in combination. And guess what? Again, I missed that boat after so many years. So only when I started changing then, I started realizing, and I saw COVID-19 crash and a crash in 2021, I kept buying. Because it's all about how you save. It's not about what stocks that you find, because when everything crashes, everything looks cheap. So it's not saving fast enough, and if you do save fast enough, you can grab those great stocks on the dip. And also, to help you save fast, I found something really special in 2017. It's about side hustle, okay? Just because you have a day job doesn't mean you can only save so much. If you side hustle with at least 2, 5, 6 hours in a week, do something simple that you can make money, you can save it even faster. That's why in 2017, I called myself father of 3 jobs. Hashtag Google it, you find me all over Google. Father of 3 jobs, I'm never ashamed about it, I'm proud of it. I've quit Netflix, I've quit video games, I quit going out to the pubs, going for this, and I'm far happier, and I feel that I've developed even better as a human being. Finally, I want to give you 4 help tips that you can help yourself get even better, okay? This really helped me, it developed me, and pushed me, propelled me even further as an investor. So the first one is to keep a journal. I keep a digital journal on Evernote, and recently I've joined Rome Research to keep digital. I write as much as I can every day or every 2-3 days, just to keep a mental notes of my emotion, of my buy and sell during the time, but most importantly is your emotion captured at that time. And when you go back and read it, you'll be surprised. You feel like you're reading someone else's story, but in fact it's your story. So number 1, keep a journal. It's very important. And number 2, all stocks investing, it's all about reading all this price trigger and all this technical analysis. No, it's about reading good business books, okay? Reading good business books helps you understand the minds of the CEO and why they do it. Successful investors, successful CEOs were initially business people, very business-minded orientated. So read lots of business books rather than investing type books. And number 3, as an investor, you have to be adaptive as well, okay? Just because Warren Buffett did well in the 1960s doesn't mean his method will work in 2021 onwards. You have to be adaptive to the market and the situation and use your own wits to make your own decision. And finally, the 4th one, it's your journey. It's not his, her, or somebody else's journey. It's your journey. How you invest, how much money you had at the time, what stocks you choose, and what you prefer, or when you prefer to retire. It's all about your journey. Don't let anybody dictate you. Don't let any book tell you where to go. It's all about your journey, and most importantly, you have to enjoy it. If you don't enjoy it, you're not going to be a successful investor. I hope you find this video useful. I hope this video will inspire and make you an even better investor. So hope to see you soon in the future. My name is Alex Go, Family Investor. Click like and subscribe to hope to see you again.
I hope you enjoyed that video. Please like this video and subscribe to the channel. Please press the bell button. Ding dong. Finally, watch the recent video up here. Bye bye. Bye bye.